All right, jumping right into it. Just wanted to introduce our panelists. Vanessa Wu, you are General Counsel, right? Correct title?
Yep.
Awesome. And Michael Tannenbaum, are you COO these days, or what is your title?
I was. Now I'm on the board.
Now you're on the board.
Yeah,
That's right.
so.
You've had many titles.
Yes,
at
I
Brex.
have.
Awesome.
Collect them.
Yes. Well, I mean, of course, let's just get into it. Many of these panels will touch on this. What was the day like for you when you got the news that things were turning a bit south at Silicon Valley Bank 1 year ago?
So Rippling is a software company. One of the products we offer is payroll. So, I think other panelists talked about Wednesday, Thursday. I would say the temperature was hot, maybe even uncomfortably warm, but it wasn't until Friday that I would say we saw that red button get hit. Mm-hmm. Personally, I woke up that Friday to a phone call from a customer who found my number on the internet. It was 5 in the morning, a woman from Tennessee to let me know that she hadn't received her employees had not received their paychecks yet. And so, I immediately jumped online. The rest of the exec team was up at 5 because we had all received similar information and news. And then we just started getting to work trying to figure out what happened, because the funds were not in our bank accounts anymore at SVB. There were about $130 million in payroll going out that day, but clearly the funds had not been received by the employees. So I think we're here to give you that inside look into what that day was like. So we were just emailing back and forth with our SVB counterparts, being told, hey, there's a high amount of volume. Payments are going to be delayed on Friday. And then, we saw the news drop that the FDIC had taken SVB under receivership. And I remember this email coming out from our SVB counterparts, ACH is not going out today. I emailed back a minute later, what about wires? And got 26 out of office messages immediately. So for me, that was the moment I knew that we were on our own, because all access at SVB had been cut.
Yeah, wow. Also, the fact that customers got your personal phone number, talk about immediate service.
Everything's on the internet these days.
Yeah, be careful. So Brex, we're an interesting company for SVB because we were both a customer, a competitor, and a partner. So, one of the products Brex offers is Brex Cash, which we can get into in a little bit, but it was kind of uniquely designed to meet this moment. And so what our situation...
Yeah, how so, I guess?
Well, us and a few others have, at the time, the issue that depositors, at least with SVB, faced was uninsured accounts, or accounts above $250,000, and the Brex product layers exposure into multiple $250,000 increments, so sort of avoiding any one bank risk, and then puts the excess above that into a money market mutual fund. Mm-hmm. So it was designed kind of not to take any specific bank risk. But so we competed with SVB in that product, but also we banked with SVB, and we had $300 million with SVB. So our moment was more actually that Thursday, because we had to decide what to do with our own balance sheet cash. And do we move it out? Do we keep it in? Which a lot of companies that bank with SVB were going through that. And there's sort of that game theory piece of it all, which is you don't want to be part of the bank run, but you don't want to be the one holding the bag without access to your money. On top of that, 30% of our customers banked with SVB. Mm-hmm. So all those people needed to pay their bills. And we had to figure out if they were going to be able to. So it was definitely, certainly in my life, the most that I had worked prior to being an investment banker when I covered SVB back in the day. So yeah, it was good.
I was going to say, did you set up a war room? How did either of you ever sleep that weekend? How did it go?
For us, and then I'd be interested what they did at Rippling. I thought this was one of the most unique times for hybrid work, because it was all happening over a weekend. So I was thinking about what it would be like, because Brex is remote first, and what it would have been like if we all had to be in the office, and how much. In this case, I know there's pros and cons of remote work, out of scope for this panel, but it was certainly a pro in this specific example, being able to have multiple Slack channels and Zooms going on different aspects of what we were trying to manage, and being able to catch up and sort of see what had happened through the different Slack channels that were being made. So that was kind of how we set it up, but interested to know.
We had a war room in office, but also a lot of folks working remotely. To the sleep point, reflecting on the weekend is sometimes a bit traumatizing. And I remember when 2 a.m. turned to 3 a.m. because it was also a daylight savings weekend.
No, that extra
was just
hour
a
loss.
real dagger when you're trying to also do a fundraise over that weekend. So
Yeah, I also wanted to talk, this is a question for you. Speaking of the fundraise, you ended up liquidating $130 million for your customers, right? Like, how did that decision come about? Just out of an immediate need, people asking for payroll? Like, how did that happen? And then, of course, we'll talk about the fundraising round later, but yeah.
Yeah, so the thing about Friday payroll is the folks who rely on Friday payroll typically are lower income. The average employee receiving Friday payroll is about $50,000 in annual salary. Hourly workers are typically paid on a weekly or biweekly schedule. So we knew that this particular customer employee base was going to be really, really impacted by the delay in payroll, or for however long it took for the FDIC to work out receivership. So as part of that war room, we made some really quick decisions to look at our corporate cash balance sheet, determine that, hey, we could essentially extend a loan out of the $130 million. I say it's a loan, but at that time, we were just extending our corporate cash and taking that risk, because we thought it was really important to do right by our customers, particularly this population that's living potentially paycheck to paycheck.
But simultaneously, you also were shoring up a capital raise, right? So how did you get in touch with your investors? What was the pitch to investors at that point?
Yeah, so that was $130 million in payroll that Friday. The following Wednesday was March 15th, so that's the semi-monthly pay cycle for salaried workers. That was hundreds of millions of dollars in pay. Payroll is typically funded 4 days in advance because of the ACH block periods, and so a lot of those funds were locked up with SVB as well. And while we want to be clear, like most of the funds were FDIC insured up to that $250,000 limit. It was a timing issue. These customers don't have those funds. They are currently locked up with SVB, and they have to make payroll. Their employees rely on them for this. So it was really important to us to figure out a solution for customers. There were obviously a lot of different options being floated around during that time period, including loans offered by third parties. We just felt that the interest rates were really, really high, and it didn't feel right to us. And so we did go out to investors. I mean, the pitch may not seem appealing to you all, but it was essentially here are the terms. We want $500 million. You need to have it liquid. It needs to be able to be delivered into our bank accounts Monday morning. And our plan is to deliver on a extensive loan program if needed over the course of the next week until we're able to recover the funds back from SVB through FDIC insurance.
You didn't actually end up needing that loan program, right? Or how much?
We didn't end up needing the loan program, but that was definitely, part of the fundraising discussions. And, the pitch is, of course, here are all the wonderful things that are happening with the rippling business. This is why we think we're going to be solid. This is the right thing to do, where you're supporting a company that wants to do right by its customers and then still has all of the global payroll, global HR products, global HR IT products, all the normal pitch that is
your
associated with
services,
rippling.
yeah. And you ended up keeping the funding round, right? Afterwards, it was a successal capital raise at the end of this crisis. You turned out well for you.
I think one interesting thing, talking with Michael, is Brex really saw a business opportunity here. When we went into the crisis, we did not. We had sort of fire after fire. What to do about the $130 million of payroll? What to do about the hundreds of million dollars of payroll the next week? Will customers trust us again? How do we shift our entire payroll system from SVB to JP Morgan? We were fortunate that we already had put a lot of infrastructure in place, but we were planning to be able to do that over the course of a week or 2 weeks, not a weekend. So there are a lot of areas that could go wrong. And so that Sunday night when the government came in and said, hey, we're gonna cover all customer deposits, we had the decision to pull out of the funding round, and we decided to stick with it. One, Parker, our CEO, really believes in the sanctity of the term sheet. Two, while the FDIC was saying, this is what was going to happen, come Monday morning, were the SVB portals going to be able to handle the volume? We were running payroll on JP Morgan for the first time. Was that going to go perfectly smoothly? There are a number of things. And so we just felt like that was the right thing to do. And then also, we know about sort of our ambitions as a company. We may want to raise funds in the future. We were happy with the terms and the price, and so we decided to consummate the deal.
Yeah. Well, Michael, Vanessa, you touched on it, but this was this turned out to be also a business opportunity for Brex, right? To acquire these customers, these startup founders that were looking for a new banking partner in this moment of panic. How did you address these needs? Was it like rapid onboarding? Did you sleep? And how many of these customers that you acquired are still with you today, if you have a rough estimate?
Right. Yeah. No, I think it was basically that Thursday night. I remember writing a blog post quickly to try to explain how our product worked in the context of what was going on at SVB, because a lot of, and particularly startups, were looking for, a new banking partner. And kind of getting back to that weekend point, look, I remember when I opened Brex's bank account back in 2017, you still had to go into a branch and sign something. And it's actually, even if you're today trying to, get a JP Morgan bank account, you can get a small business account, but Vanessa mentioned like international wires and transfers. Like a lot of startups have foreign employees, and so you actually need more capabilities in a traditional like small business bank account, the way that a lot of bigger banks would categorize startups. That's why, frankly, SVB existed, because startups do have different banking needs. And so, Brex we had to kind of onboard. I think we onboarded like 2,000 customers. Probably 90% of them are still with us, which is good.
2,000
in a weekend.
A weekend, yeah.
Yeah, so that was more my area. So we kind of, on the sleep point, for me, less memorable about the sleep was more that I was supposed to go skiing that weekend with my family, and then so in the morning, my wife had to drive because I couldn't, I was like on the Zoom in the car. And then like I knew I couldn't get on the plane because that was Friday, and I was like, obviously I'm not getting on a plane right now. So I kind of like dropped her off at SFO because I was out here, and then I like helped get the luggage to like the curbside check-in. That was like the end of my family duties. And then I was like, bye. And then I stayed in the airport parking lot for the entire day because I couldn't leave.
Wow.
Yeah. And you may ask
Stay on that hot
about
spot.
Food and bathroom, and I'll just let you imagine. And so I just kind of, and then I stayed at an airport hotel. And then I never left for a while. I think like 2 nights. And then I went back. But yeah, so it was kind of like, it was definitely, the thing for us is, so you had the customer onboarding, you had the credit risk, as I mentioned, 30% of our customers, we had to figure out how to pay, if they were going to pay their bill, and what do we do with their limit, and make a bunch of big, real game time decisions, just like Vanessa had to. And then also fraud, right? A lot of money moving, a lot of new accounts being
huge
opened,
volumes,
huge volume, ACH rules. People didn't know where the ACHs, SVB was like unclear whether the ACHs were clearing or not clearing, and there's all these complex NACHA rules. So kind of navigating all that, and we were asking people like, wire the money in, because wires, as anyone knows who's ever received one, like you get one, then it's there, right? ACH, they can be pulled back. So it's kind of like, yeah, it was definitely quite a time.
Yeah, but you said it ultimately, it ended up being you've retained a lot of customers from this experience, right?
Yeah, it was like a big one-time bump for sure. Mm-hmm. I think it was a real big validation of the way the product was constructed. I don't think we necessarily anticipated the SVB collapse specifically in this context, but I think the product kind of met the moment in that way. And obviously we like SVB, and it wasn't like we were dancing on the grave. But it just, we ended up actually putting money into SVB in the new First Citizens, because I think it was good for the ecosystem. Yeah. So it was less about that and more just like kind of like Vanessa was saying, is like you have customers, they have a need. You just you got to fill that in the moment.
Post-crisis, I would say you started this off saying that you view yourself to some degree as a competitor of SVB. How much do you still view yourself in that sense? Like, do you offer certain products that early stage startup founders, like, how are you positioning in the ecosystem now?
Yeah, I think post SVB, and there's a few other folks at this conference speaking later. I think there's like a smaller set of places that startups and tech companies look to for banking. There's of course the big banks that people will choose, but they're not going to have that same, I guess, specific kind of service and product set. And so I think the options for early stage companies have narrowed a little bit, and fintech players are probably more the default choice than even they were prior to this. is my sense.
Yeah, growing market share. On your end, for banking partners, what both have you done since the crisis? Have you diversified for your own companies, your banking partners? I know you said you've gone back to SVB in some sense. What are you looking at? What risk do you take in that front? Like how much would you move, say, 20 or 80%? You don't have to get too specific, but wanted to check
and
the
be
breakdown.
interested to hear from Vanessa as well. I think for me, for Brex, so this is our business, so we always had multiple options, right? We started in the card space, and there we had multiple bank partners. On the bank account side of things, we actually worked both with JP Morgan, which I know you worked with as well as a bank called Column. So we had kind of multiple options and multiple partners, and we were, in touch with them during this too. So I think for us, because this is like our primary business, we probably were very thoughtful about banking partners in advance because we had to be. And we only we just happened to not use SVB for ACH, but we easily could have as one of our options. So
Yeah, Vanessa?
Yeah, I mean, we still have our accounts open with SVB. All our volume runs through JP Morgan now. That was also a planned transition just with the maturity of the company. So, I think as most folks in this room know, you can't just open money transmission accounts with a new bank over the course of a weekend. That's a multi-month project plus the licensing, which can be multiple years of work behind that. And so today, we predominantly work with kind of the quote unquote too big to fail type banking partners. As we've expanded our offering, we do global money movement, global payroll. We do work with certain fintechs, but we have gotten a lot more cautious, I guess I would say, in terms of really diligencing those partners and all the way down to their banking partners and what they're doing with respect to capital. And we also see that as we've sought payment licensing around the world, that regulators are likewise really much more focused on the safeguarding of customer funds for fintechs that have payment licenses, e-money licenses, and so on. I think both UK, the FCA, and in Ireland, the Central Bank of Ireland have just put on in the past month safeguarding workshops and Dear CEO letters on that front. So I'm not saying it's a great thing for the industry necessarily, because these fintech players were a big part of how we got to where we are. We're incredibly grateful to SVB for giving us the special type of bank account to get off the ground. When the company was just our CEO, Parker, in his basement looking for a bank account to fulfill this dream. And so, we definitely do see, unfortunately, a bit of the hole in the industry now.
I want to go ahead and open it up to any audience questions, if anyone has anything that they'd like to ask our panelists. If not, I can, keep firing off questions, but yeah.
Do you think Silicon Valley is worse off after this whole crisis? I mean, you guys got some customers, how does Silicon Valley stand today, sort of after this whole crisis?
I think, I do. I think to what Vanessa was saying, I think SVB was definitely a part of Silicon Valley, and Silicon Valley Bank was a jewel. That's the interesting thing. I was an investment banker in the regional bank space when I was right out of college, and you would have never imagined a world where someone didn't buy SVB, because it was always traded at a premium. It was always considered like almost like a toll booth on the innovation economy, right? And so many people were envious of that position. So it is definitely unfortunate. I think what Vanessa said is both companies I've worked at, SoFi and Brex, were customers of SVB. SVB bailed me out of kind of a nasty situation once with a warehouse line. So I think they were a unique position, even that was FDIC insured, so they had lower cost of deposits, they had access to all the money movement, and they could provide that for startups, just like Vanessa's mentioning for Rippling as well. So I think that it is absolutely a loss. So it's kind of hard to say it's not, that there isn't some hole that they were filling. And I think a bunch of people are trying to fill that, and maybe they'll be piecemeal, but I don't know.
I mean, SVB would argue that they are still filling that here.
Sure. And I don't mean to say, whatever. I don't mean to say that they aren't, but whatever.
Yeah.
I 100% agree.
Yeah.
My husband is a founder of a startup and also a customer of Rippling. So part of that weekend was also him sort of coming to where I was holed up to be like, where are my payroll funds? And like, I'm gonna wire money out of our personal bank accounts to cover payroll for my company because I bank with SVB, sort of things. And like, we're trying to help everybody, your customer, like everybody else. But like in the aftermath, they no longer bank with SVB, and we talk about this frequently. It sucks. It's hard to move money. It's hard to pay bills. It's hard to access accounts. Like he, just from his own personal experience, in that seed stage, Series A stage, it's tough.
I guess are there any other takeaways that either of you have focused in, especially in your focus both with Brex and Rippling, where there still are needs in the ecosystem that whether I know you can fill within payroll or you more directly as a competitor, any places that there are still gaps that need to be filled or things that you would want to focus on in the coming years?
I think SVB, was unique in that they had this venture debt product and, sort of startups in kind of what they do. And I think, Brex does fill a big part of some of that. And I think a lot of the other players that have come into the space. So I think the story has not been fully written. And I think that over time you will see, just like you see the unbundling of services and then kind of the rebundling, I think that's the opportunity for a lot of the companies, Brex included, and kind of the rebirth of what was lost.
Yeah, and I think we see at Rippling, I don't think Rippling set out to be a fintech, but because we run payroll and we run contractor payments and now bill payments, we are, but that it's important to really own our own infrastructure, even though we're reliant on banks, that we have our own licensing, our own mechanism, our own infrastructure, that we can control our own destiny and really sort of provide some of those counterparts to the banking system, because there are niche areas like payroll where you can't have those funds in your bank account when you need to make a payment to all of your employees. And same with bill payments and other payment activities. There are these moments in time where those funds need to exist elsewhere.
Well, thank you both so much. This is a great conversation.
Great, thank you.